Morning, it's Vijay here. Today is Wednesday, 5th February 2025. The topic today is overconfidence of the bears. Please welcome to my pre-market commentary. And we discuss here what's happened yesterday, what's likely to happen today, and way beyond. So yesterday was one of the classic turnaround days where the bears were in full flow. Day before yesterday, they had the full command. They were 89% short, the FIIs I mean, in the futures market, and we have never seen that kind of short positions. And I had warned that this is the time for the turnaround. And if the bears are not careful enough, they will get beaten. So yesterday, that's exactly what happened. In the first 1 hour, the bulls took it up, but then they gave up because the bears came in plenty, and then they could not bring it down below a particular level. This is how the turnaround happens. This is my experience. Now, it can happen that history may not repeat itself perfectly. It may rhyme, or I could be completely wrong. But in terms of confidence, underconfidence is there among the bulls. People feel that every rally will get sold into. So any percentage point above their purchase price, 1%, 2%, they are willing to get out. But I think things have changed. There's so many things which are in favor of the bulls, but the bulls themselves don't know. There are so many things against the bears themselves don't know. The reason simply being the bulls are underconfident and the bears are overconfident. Overconfidence kills. It has killed me many times. I both as a bull and a bear, and purely from experience, I will tell you, extreme overconfidence in the bears. And the data is showing something else. Let us look at a simple data of earnings. People said earnings will be very bad. This year, this quarter on the Nifty, out of 37, 14 are above average. Below is only 10. So which means above average plus inline, 14 plus 11, 25. 25 out of 37 are above average or in line. So there is nothing for us to get pessimistic. Mixed, of course, is 2, but only below 10, you just look at it, only 10. That means just 25% of the Nifty stocks have not done well as far as the market is concerned. So we go in today, Nifty hit a 4-week high, which many people might have missed, and it snapped a 2-session losing streak led by Shriram Finance and L&T. I think L&T has been hammered unnecessarily. I think infrastructure budget is there with the government, and L&T should do very well. We hold L&T, that is the disclosure. Then Nifty has registered the single biggest session gain in over a month, which again people may not have noticed. Again, as I say, because the bulls are underconfident. Small cap closed in green, energy snapped 2-session winning streak. Basically, everything was positive. Nifty Pharma hit a 1-week high, and Nifty IT also moved up. This was expected because you see the global markets were good going into the session, but somewhere along the line, the China action of tariffs came into the news and there was a sell-off. But remember, that sell-off was contained and the market closed almost near the highs. Nifty autos advanced, FMCG declined. I think FMCG is one sector which will not do well in this rally. So that is what one should be careful about. People are thinking that 12 lakh rebate is going into FMCG. I doubt very much. I think it'll either go into savings or into buying a house or buying what we call consumer durables. So that is where it will finally land up. So yesterday the US futures were down, yet the Nifty was up. Markets opened lower there, but S&P has closed 0.7 higher, Dow closed 0.3 higher, percentage higher, and Nasdaq was about 1.3%. Google came with results after market, and Google is down by 8%, but I think the market will take it in its stride. Treasury yield, people were talking of it will reach 5 and cross it and all that, and I was mentioning clearly that Treasury yields will go below 4 in the next 6 months. Today we are at 4.51, equidistant from 5 and 4, and I won't be surprised if we get it below 4 in the next 6 months. Watch this space. If Treasury yields fall, dollar index falls, it is very good for emerging markets, and India is the best placed country to take advantage of it. Today, there is still gloom and doom. People are underconfident. People are scared because they were overconfident. The bulls were overconfident in the first 6-8 months of 2024. So the wheels have turned, but sooner or later, I think the wheels will turn for the bulls. Bulls, it has already turned, in my opinion. Commodities, look at Brent crude. They said it will go to 90. From 82, it has come to 76. Gold and silver are very strong. We hold both of them. We think much higher levels are there, especially in silver. FIs and DIs, FIs bought about 800 crores. The first time since about 40 days. So there is something to look forward to that. DI is sold, but net, you see, there was a net buying by the institutions. So Gift Nifty, which I don't trust it too much, is indicating a start in the green for the Indian market. And results today will be mainly Kansai and Nerolac, which will be an interesting thing. Yesterday, Asian Paints came with poor results. Zydus Life Science, Aarti Pharma for the chemical sector. Swiggy, I think, will not be great. It will suffer fate of Zomato, but of course, it's all in positioning. If positioning is in short on Swiggy or negative on Swiggy, it may bounce back. Arvind Fashions is also an important thing. Symphony in winter, not something great. InfoEdge is on Naukri, which will give us some idea of how the job market is. So the positive earnings which came yesterday, HOEC, Max Financial, Tata Power, Torrent Power, Whirlpool, Happiest Minds, and RVNL received some orders. Titan and JK Tyres were not great, but Titan is a very difficult share to predict. For all we know, it may go up. Positive was Axis Bank and Max Finance, and that may be one stock to watch. Or two stocks to watch: Prism Johnson and NLC, because of corporate benefits or corporate actions. So therefore, now I will just show you what these two, the Nifty and Bank Nifty, both of them. The red line is the high of the budget day. Red line is the high of the budget day. Yesterday, both of them, Nifty and Bank Nifty, both of them have crossed that red line and closed firmly in the green, which means all the pessimism of what we noticed, this was on the budget day, it got sold out. Next day, it got sold, but it closed better than the opening. Today, the green candle, yesterday, the green candle shows both in Nifty and Bank Nifty that it has closed above the budget high. I've been mentioning that budget high is very important. It has closed, and I think today onwards, it will only begin. And we have good news coming surely on Friday with RBI cutting interest rates. Mr. Modi is meeting the president of US on 13th of February. He's the first head of state who is meeting. So just imagine the impact it is likely to have on the markets, on geopolitics and everything. So he goes with the strength of India, with the good budget, and with tariffs being reduced, where US wanted tariffs to be reduced on Harley Davidson and the like. Across the board, we reduced tariffs where US and India are doing trade. So there is nothing to worry, in my opinion. I think if you are going to be bearish, pessimistic with this kind of backdrop, then you are running a risk. But then overconfidence is very high. One example of overconfidence is the weekly Nifty settlement is Thursday, that is tomorrow. But yesterday, in the money, options were trading below intrinsic value, which means, I'll just give an example. If Nifty is at 23,500, at 23,000 call option should be trading at 500 rupees or more. But it was trading at some 480 rupees. Similarly, at 23,600, 23,700, 23,800, all of them, they were trading below the intrinsic value, which means the people feel that it will go below 23,500 and they're shorting it heavily. Yesterday also was a case where both the call and put options moved dramatically for no reason. The madness is there. The bears, the short sellers or the sellers are controlling the market is what they think. The cash market is telling you a different picture. I would like to look at cash market, because cash market is where you have actual transactions. In futures is only synthetic. You have to follow the cash market. People believe that cash market will follow futures. That is not so. It is the futures which will follow cash market in practical terms. In theoretical terms, it may be anything. That is immaterial if you're a trader. If you're a bookish knowledge technical analyst, you will talk about it. Some people are saying, no, it will. You have to look at futures. That is wrong. You will see the effect of it today. Nobody can be 100% sure. Anything can happen, but I'll be very surprised if you do not get a big move today and from now onwards. you will see more days, you are likely to see more days up than down. So with this, we are going definitely, today is a free day for my Telegram followers. So I show my trades. Today, all my trades will be long. It will be with Nifty futures, Bank Nifty futures on all declines. And I hope that I will be able to report to you tomorrow with some good news on our trading today. And so therefore, we are bullish as usual. And whatever you do today, I hope it is profitable. Thank you for joining me.